Aviation is a very cyclical industry. We've seen it after 9/11, the recession in 2008, and most recently the pandemic. My mission here at Cashflow on the Fly podcast is to arm pilots with all the tools and knowledge they need to achieve financial freedom through real estate. This is your host, Sach Bernhardt, and I hope you enjoy it. Hey, welcome everyone to another episode of Cashflow on the Fly podcast. We have Hollis in the house today with us. He is a commercial multifamily investor, and I'm excited to talk about him and what he's doing in the commercial real estate space. And Hollis came from the wholesaling with a wholesaling background, and he transitioned over to multifamily. So I'm excited to find out why did he make that transition over, and also he's got a giveaway, which is a due diligence checklist that we're not going to have enough time to talk about the whole thing here in the podcast, but we're going to talk about some of the points in the due diligence checklist, and then for the audience that wants to go and learn the rest of the due diligence checklist, they can hop over on your website and download the rest. So welcome to the show.
Man, thanks for having me.
So I know you grew up in New York, right? You currently live in Connecticut. We're in some of the same Facebook groups and masterminds, so that's where we connected. We're actually working in the same deal as well. So that's pretty cool, man. Tell us a little bit about your background. When did you get started in real estate? Why real estate? And I know you started wholesaling. How did that transition from wholesaling to multifamily happen?
Yeah, for sure, man. It's really, for me, this journey started when I was seven-year-old Hollis in Hollis, Queens. I couldn't have been any older than 7, 8 years old. We were renting a house at the time. I rented houses most of my life, living with my family growing up. And I have this vivid memory of the first of the month. Our landlord's name was Mr. Carter. Mr. Carter would come around, and this is the 90s. Everybody's paying their rent in cash. So he's coming around collecting the rent, and he's just stuffing $100 bills into his wallet. By the end of the day, his wallet wouldn't even fold anymore. It was so fat. There was so many $100 bills in that wallet. And I just remember looking at that and thinking, wow, I don't know how he did it, but Mr. Carter has it figured out. Owned several houses in the neighborhood. And so for me, that kind of set real estate as the goal for me from a really young age. Just watching this older man who had financial freedom. He did whatever he wanted to do. He just came by and collected all this money every month.
He's playing the Monopoly game, right?
Yeah, little did I know there was a lot more to it than that. But for a 7-year-old, that's all I saw. But the problem that I had was growing up in that neighborhood, in the circumstances that I was in, I didn't really see a path to actually accomplishing those goals, actually acquiring properties. Anybody who knows anything about New York real estate, everything is expensive. Small things are expensive. Big things are expensive. Everything is expensive. Single family, multifamily. For me, as I got older and thinking about maybe purchasing a property in the future, it seemed impossible. Like I would never be able to save up enough money to actually do that. And it wasn't until many years later into my adult life, a buddy of mine takes me to this real estate conference, and it's talking about wholesaling, and you learned the ins and outs of that and showed me the ropes of that. And for those who don't know, wholesaling has a pretty low barrier to entry. If you're willing to go out there and put in the work and find these deals, find these off-market properties, and then you're able to sell those off or flip those contracts over to investors. So I started doing that, and I had some success doing that. I didn't like it. Not really, it didn't really cater to my personality per se, but
why is that?
So I don't really consider myself a salesperson, to be honest with you. I like talking to people. I like bringing value to people, but wholesaling, it felt a little bit more salesy to me personally. And maybe I was doing it wrong. Some people are like phenomenal at it and they crush it and they're doing tons and tons of deals. That wasn't my experience. It turned out to be like another job. I already had a job. I'm a software engineer by trade. I already had a job, and wholesaling ended up being another job. And so it was missing that passive income element that I was really looking to get out of real estate. And so I started looking at actually acquiring property. Now that I was a little bit older, I had a career, I had the wholesaling thing going, I started looking at acquiring property. But at this point, I'm living in Connecticut, which is also very expensive. Yeah. It was a little bit closer to my goal, but I wasn't quite there yet. But now I had a lot more knowledge. So I started looking at bringing in partners on deals to actually acquire these small 2-3 family properties. And when you start bringing on partners, obviously that's more mouths to feed on the deal, right? And so the numbers can get really skinny on you. So I started trying to take advantage of the economy of scale. Okay, what if instead of going for a 3-family property, I got a 10 unit or a 20 unit, right? And now the numbers start to make a little bit more sense when you bring on partners. And there's also a lot less risk when you talk about your vacancy risk there, right? As I started to do that and started to look at bringing on these partners, bigger deals means more money, which means you had to start to really learn how to source capital and find partners to join with me on deals and things like that. And so that's what really brought me into the commercial real estate space, brought me into the private equity for real estate. And I really like it because it's allowing me to the 7-year-old me out there, who's probably not 7, but the younger me, I wish somebody had come along and told me about these things, educated me on this space beforehand. So that's my journey and how I've ended up where I am.
I love it, man. Are you still doing your software engineer trade, or you stopped doing that as well?
Yep. No, I'm still a software engineer. I still have my W-2 job, and I actually do enjoy that. I'm not one of those people that's like looking for a way to quit their job because they hate it so much. I really do enjoy software engineering. It's an opportunity to build things, which I really like. So yeah, I still do that.
How do you manage typically? So, like, just for context on the audience, is a Thursday at 3 p.m. How do you manage? Like, typically, obviously, W2 jobs are 9 to 5, right? Do you have more flexibility on your schedule, or are you taking days off to be on shows and stuff like that?
Yeah, no, great question. So I always tell people I've been working from home since before it was cool. Like now everybody's working from home. Everyone's all about these flexible schedules. I've been working from home since 2013 or 2014, something like
Wow.
that. So yeah, I have a pretty flexible schedule with my job that kind of allows me, obviously I still take a lot of time to them. If I do a show, like I work a little bit later in the afternoon, or maybe I start a little bit earlier in the day, but I do have a little bit of flexibility to give me opportunities to do stuff like this.
Nice. That's pretty cool, man. That's awesome. And yeah, by the time the pandemic came and people were doing their work from home, you're like, dude, this is what I've been doing, man.
Yeah, yeah.
What kind of asset classes do you prefer?
Oh man, great question. So I actually really mobile home parks and short-term rentals. One, those are both very highly depreciable asset classes, meaning you can get a lot of depreciation out of those asset classes, which means more tax benefits, which means more money that you get to keep in your pocket from cash flow, which is the name of the game here, right? Not really how much money you can make, but how much money you can actually keep. I really like those two asset classes for those reasons. And then on the short-term rental side, I pretty much exclusively stay in Airbnbs, and I have for a really long time. I am my own customer, which kind of I think gives me a really great perspective there. And then on the mobile home park side, mobile home parks are some of the lowest or the most affordable housing out there. And anytime you're dealing with a product like that is really scarce. And there's an affordable housing issue nationwide. There's just not enough of it, not enough of it being built. So I really like mobile home parks because the demand for that product will always be very high.
Yeah, I agree with that. And I like both of those asset classes as well. And I agree with, if you were to put them on a list of the most expensive asset class to the cheaper one for providing housing, obviously mobile home parks will probably be at the bottom, which means that as people get tighter on money, when we go through recessions, they tend to move from the more expensive asset class and trickle down to the lower one. And so just by picturing that, mobile home parks will always have occupancy pretty high, right?
Exactly.
Man, I love that, man. And I think a lot of stuff as well is, I know some people, when you talk about mobile home parks, they think of their neighborhood trailer park that they've seen in the past and they think it's something ugly. But it's not, right? There's nice mobile home parks out
Yeah, for sure. So a funny story about that. I'm actually flipping a single mobile home right now, which I don't really do flips, but I'm flipping this one. It just kind of fell into my lap. And so I'm doing this project and I'm telling my wife about it. I'm like, oh yeah, I'm flipping this mobile home. And she's like, oh, what, in like a trailer park? Oh, why are you doing that? And so it's been like a month and a half now. The work is complete. We just put the property on the MLS. And she's like, oh, I want to see how it came out. And so she looks it up on Zillow or whatever. And she's like, oh, this isn't a trailer park. This is really nice. So,
there. That's funny. Yeah, there's some nice ones, man. Yeah, for
yeah,
sure.
so it just goes to show it's not always what you expect when you hear about that asset class.
Dude, what are some of your biggest challenges that you faced throughout your real estate career?
Oh man, I think at first it was all up here, all in my head. Again, growing up in the financial situation that I did, where nobody really owned, my parents didn't own any property. My grandparents owned property, but they owned property because they bought it in a really long time ago. You know what I mean? When things were a lot more affordable. I really had a lot of challenges mentally to really even believe that I could operate in this space, to be honest. And so overcoming that through just improving myself and education being a huge part of it, not being afraid to ask questions and really put myself out there. That's really been a major game changer of me. Joining groups like we're in the Raised Masters group and the masterminds and things like that has also been a huge game changer. The other side of it is once you have the education, actually taking action, right? You got to go out there and wholesaling at first. You got to pick up those phones and make those cold calls and get the phone hung up on you. And
Yep.
you can go through all of those types of things and negotiations with the seller, then negotiations with the buyer, and then all those typical challenges that we deal with in real estate. And not coming from that field, not coming from that background initially, some of those were like pretty difficult hurdles in the beginning.
Yeah. And do you bring a pretty good point, right? Because which is why you bring you play a really good role in doing this private equity capital raising and bringing money to deals and helping the passive investors, because doing this type of deals is not easy, right? Like picking up the phone and getting hung up on, doing negotiations, finding the right deals takes a lot of work. And honestly, I don't know if doing that is the right fit for everybody. So leveraging people like you that already have those connections with other operators and that knows how to bet a good deal, what's a good deal, what's a bad deal, what makes sense, is like a shortcut for people that want to invest in real estate, right? They don't have to go through all of that. You already went through all of those hurdles and got all those your teeth cut on finding good deals and knowing what's good and what's not. So they can leverage you and get to the front of the line and start investing in good real estate.
Yeah,
Um,
100%.
so having said that, I know we mentioned about the due diligence checklist, right? This due diligence checklist, does it work for both the operators and passive investors, or only one or the other?
So actually, it works for both. So this is something that we high level new operator perhaps that brings us a deal, and these are just the questions we want to know before we even start to put pen to paper and get into underwriting and checking assumptions and everything like that. There's several questions that we just want to know about this operator, maybe their past deals, this deal into specifically this market. That it's really separate from the underwriting. We just want to do a little bit of digging, and then some of the points that we bring out in there are things that you want to look at during the underwriting, or really especially from a limited partner perspective, a passive investor perspective, as you're going through that PPM, right? As you're looking at the OM and the PPM, and you read certain things, maybe about the waterfall split or different market assumptions that have been made. There are questions that you may want to ask about that. And you have to do your own due diligence as a passive investor as well, because no one's going to answer those questions for you unless you ask them.
Right, I love it, dude. I love it. Give us a couple of pointers on the due diligence checklist that we can give the audience so that they know what kind of things to look out for.
Yeah, for sure. So since we were talking about the hurdles and the pain points, I'll start off with something that's really difficult. And it's a major hurdle if you're a single individual, if you're not a part of an operating team, and that's market research and market data, right? So anytime you look at any deal, there's assumptions being made, and we say they're assumptions because we're assuming that this is going to happen. But the question is, what are we making those assumptions based on? And hopefully the operating team is making those assumptions based on good market data. Now, the reason that I call this a hurdle is because good market data there's only a couple of ways you can get it. One of which is by paying for it and paying a lot of money for it. I talk about some of these data providers, the Crexies and some of the companies like Lightbox and the software tools that they offer. These are not cheap tools by any stretch. These are enterprise level tools to gather this data. The other way you get it is through experience, right? Maybe you've done deals in this area, so you have this neighborhood really well, and you're able to speak to those assumptions intelligently. And then the other way you can get it is working the phone, right? You got to call the property manager here. You got to call the property manager there. You got to call the guy who owns that building. All these different things are part of the due diligence process that the operating team should be performing. Now, obviously, as the passive investor, you're not here for that. That's why you're choosing to invest passively. You don't want to invest thousands of dollars in tools. You don't want to spend hours on the phone. You don't own 5 buildings in the same area to make the assumptions based on. So when you're going through and looking at the PPM, the operating team will have gone through those questions already, but you get to ask questions about the rent assumptions. You know what I mean? You're looking at, okay, we're looking at being able to increase the rents by this much. How do we know that we'll be able to do that? Right? What do the rental comps look like in that area? Because as a passive investor, you have the right to ask those types of questions, and you don't need to ask them all, but asking a few crucial ones will let you know whether that operator has done their research and has that data or not, right? Because if you ask them to see the rental comps for the property, if we're talking about a commercial multifamily property, and they're like, oh, we don't really have that, that's a major red flag. Red flag. Or if you ask for it and they give you one, but it's 2 towns over, and it's like, oh, wow, maybe that could also be a red flag you want to look for. So the due diligence checklist has a bunch of questions in there about that, but those are things questions you want to ask. And like I said, you don't need to ask them all, but ask a few just to double check that the operating team has done their due diligence properly.
Yeah, make sure they're not giving you a comp for a Class A asset, and the one that they're asking you, or the one that they're raising money for, is a Class C in a completely different neighborhood, right? It's like compare those rents.
And it can be tricky, right? Because the mileage, it could be like, oh, this is an asset from 1 mile away, right? Okay, cool. But neighborhoods can change, man. You know how it goes, right?
From one street to another, man, a neighborhood can change. So yeah, 100%. Totally. I love that, man. That's a pretty good point. And what else you got on your due diligence checklist?
Yeah, another one I want to talk about is it's kind of higher level. Maybe you get that first email in the subject line that says percent IRR or 2.75 equity multiple. Doing the due diligence on those numbers, because not all numbers are created equal, right? Maybe they're advertising, oh, this neighborhood has this property has a 65, 89 walkability score on Neighborhood Insights, but the deal is for self-storage. Everybody's walking to self-storage. It doesn't matter what the walkability score is, right? So you want to do your due diligence on the numbers. Obviously, as an operator, and even, myself as somebody raising capital, we're going to put the good numbers out there, because if we genuinely believe it's a good deal, right? If the numbers look good, that's what you want to hear about. But also double check those numbers and make sure that they're actually meaningful, right? If you have a 3x equity multiple, how long is the hold time, right? If you get 3x equity multiple in 5 years, that's fantastic. Maybe look a little bit closer at that, but that's a fantastic deal. But if a 3x equity multiple and the hold is for 15 years, maybe that's not a good deal. That's a really long hold period, right? So doing due diligence on the numbers themselves, like, it's easy to kind of get caught up in all these big, beautiful numbers, and the returns make us happy, and we're like, oh, I'm going to kill it this year. But we can just take a moment and double check due diligence, ask the questions, and make sure that the numbers presented are actually relevant to the deal and relevant to the return, so you really understand what you're investing in.
Yeah, this is, offerings 2x, 3 years, 50% IRR. Everybody's deal. It almost, I don't want to say it's meaningless, but without doing the further due diligence like you're talking about, it just from a surface level, every deal is the same. So if you were not really looking farther into it, you might as well just fucking throw your money at whatever deal comes first, right? They all pretty much put the same numbers out there.
Yeah. Yep. Exactly. So you got to pay attention to the details. Pay attention to the details.
Yeah. I love it, man. That's a pretty good point. What else? Give us another point here on your due diligence checklist.
Cool. I'll throw you one more, and that's talking about tax benefits in real estate, right? So this is a juicy one. This is why everybody wants in. Everyone, hearing about these tax benefits in the real estate market. Real estate lowers taxes, all these sorts of things. Do your due diligence on the business plan and understand how the operating team plans to leverage those tax benefits, and how much of that you individually, this is some due diligence on your own personal tax situation. How much of those tax benefits will you individually actually be able to use, right? And so I won't go down the whole rabbit hole of the active income versus passive income, but not all tax benefits are created equally, right? Sometimes you can have a write-off that you can't use. The IRS says, yeah, you don't qualify to use that type of write-off, sorry, or you've reached a limit for that type of write-off and you can't use it, right? So you may have thought in your mind, maybe in the marketing email, it said, dollar for dollar, 100% depreciation. dollar for dollar. That's great, but that might not mean very much to you
Right.
as a passive investor, depending on your personal tax situations. Do your due diligence, understand your own tax situation, and then, of course, understand how the operating team is planning on leveraging. Are they doing cost segregation studies to accelerate depreciation and things like that? How is the depreciation recapture going to work? Is the depreciation going to be fully passed on to the passive investors, or is it a pro rata based on ownership percentage? All these types of things that questions you want to ask as you're doing your due diligence to really make sure you understand. Obviously, real estate does have amazing tax benefits. Huge reason why I do it. I'm sure that you love that as well. Everyone does, but just doing due diligence on every deal to make sure that you're going to actually be able to take advantage of those tax benefits.
Yeah, yeah, and confirm whether or not you really want to take them. Dude, I had so much trouble trying to refinance my house lately because of all the syndications that I'm invested in and all of the all the depreciation that I'm taking. So on paper, it looks like I'm losing so much money. And when the lenders saw that, oh my goodness, they were losing their minds. They were like, dude, how are you going to pay for all these losses? So trying to explain to them that this is a paper loss and I'm not actually having to come out of pocket to like up for that is it's just it's not it was so hard to get across. Finally got it done, but I had to write all these letters explaining what this is. Obviously, don't want to scare anyone from doing it. I'm just saying know when to. There's better lenders for that. It's probably my bad for going through a typical lender to try to do that. And let me add something else to it. I definitely don't want to scare anybody from doing that, but I don't have a W-2 job. So not having the W-2 job plus taking all those losses, really putting both those two together, it just really sets it off for lenders. But if you have a W-2 job, it's a non-event because obviously that takes care of all your lending because you got your statements that you can prove your income. But someone like me, dude, it's just like it was just red flags went all over the place for them.
Looking really bad on paper there.
Yeah, yeah. I was just got paying for anything. Hollis, we're reaching here the end of the podcast, and I'm gonna throw you here on the fire. I forgot to tell you at the beginning that I asked these two famous questions, so it will be pretty interesting to see how you respond to them. The first one is easy. I want you to tell me your most favorite business or real estate book, and why is it your favorite?
Ooh, so I'm reading Traction right now, which is fantastic. I also am reading $100 million offers. I recommend everybody read that book. It's a phenomenal. Those are both business books. $100 million offers is really good. It's a very simple, short book. It's only 100 something pages. And I love it because it provides really practical steps on how to get yourself noticed. In 2022, almost every market is saturated to some extent, right? Like nobody's coming out with something that's never been seen before until Elon Musk takes us to the moon. He's going to be the first person to do something new in a long time. Right? But $100 million offers really shows you how to position yourself to make whatever product you're selling, whatever it is, to make it really desirable and make it an offer they can't refuse.
Yeah, I love it, man. And we talk with our sales team, we talk all the time about that, right? It's not always about money. If it was about money alone and not value, to me, it's all about value, right? It's not about money. If it was just about money, Starbucks wouldn't exist, Lamborghinis wouldn't exist. There's a bunch of things that wouldn't exist in this world if everything was strictly about money. So it's all about value and mostly perceived value from the person acquiring, right? So that's why I love that book as well. I've read it as well. Um, Dude, so this question, if all you have built up to today is taken away from you, your money, your real estate, your career, except your knowledge, what would be your fastest way for you to get to the point of getting to financial freedom the fastest?
Oh, wow. That's a really, really good question. My answer based on the person I am is networking. I would start going to a lot of different networking events, real estate networking events, but also non-real estate networking events. Because if you're able to teach people something, if you show up, you go to some sort of a car show or something like that, you place where you know that there are people with money and you're able to come in and bring them value by teaching them, hey, this is what commercial real estate is. This is what it offers. This is how you can participate, right? Now you are instantly the perceived expert, whether it doesn't matter how much money you have in your pocket at the moment, you have the knowledge, right? You're the expert. So by networking with them, and then on the other side, you go to the real estate networking events and you go find some operators looking for capital. It doesn't take any money to do either of those things. And pretty quickly, you'll find yourself at a very high demand position from both ends.
Love it, man. That's awesome. Pretty cool. Hollis, if for all of our audience, if they want to pick up the due diligence checklist and go over the rest of the items that obviously we did not get to talk about, how can they get that and how can they get in contact with you?
Sure. Our website is simple. It's 24capitalgroup.com. That's 24capitalgroup.com. The due diligence checklist, you just add a /DUE due-diligence to the end of that URL. So it's 24capitalgroup.com/due-diligence, and you can pick that up. Go ahead and download that. And go over it. Like I said, you don't need to ask all the questions, but asking the key ones will definitely put you in a good position.
I love it, man. We're going to add the website to the show notes for everyone listening so they can access your website and download your due diligence checklist. And one more thing before we leave, I know you have some deals you're working on and raising capital for. They are, however, 506B, which means you can't publicly advertise them, right? And so the reason why I bring that up is just because I want to tell the audience to connect with you and establish a relationship so that if they want to start investing with you and your deals, they need to have that pre-existing relationship before you can even show them anything, right?
Yep. And if you want to do that, you can just go to, again, my website, 24capitalgroup.com/book a call. One word, book a call. And to schedule a call with me, my full calendar is there. And I'd love to start that conversation and see if we're a good fit to work together.
Awesome. Hollis, I love it, man. It was great having you in the podcast, and I look forward to having you on it again.
Man, I really appreciate it.
If you want to never miss another one of your kids' practice games, spend more time with your family, or simply do more of what you really like to do aside from flying, grab my book where I explain in detail everything you need to know to make this a reality. Go to bernhardcapital.net/ebook and download my book. It's completely free, and I hope you like it.